Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, March 5th, 4:40 p.m. Eastern Time. Coming to you from Fort Lauderdale, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state still in a mild correction. And if we try and gauge over here, still have the red arrow on market leaders. Some are starting to get a little short-term exhaustion and starting to see some rallies back up. And then on the other hand, some new leaders are emerging that are at highs that have pulled back less than the market and held up better above short and medium term moving averages. So we're keying in on those, and I'll reveal some of those later in the video. Short term, we're still trading above that 21 EMA. Medium term, still below that 50-day moving average. And then long term, nice bounce off the 200-day today, although small and mid caps continue to lag and show relative weakness. As if you've been watching the videos, as you know, the famous quote from Don Vandenborg, nothing good happens below the 200-day moving average, and that is where all bear markets occur. So good thing to see that holding for today. And that kind of brings me into what happened today, and that's basically, in summary, strong bounce off the 200-day moving average. 21 over 21 list still under construction. Big 8, nice day today, up 1.84%. RG8 as well, strong today at 1.73%. Seeing some good breath as well with equal weight RSP and QQEW up as well. 60/40 stock and bond up 0.76% and GROTECTION up 0.57%. Let's take a look at the inter-asset correlation. As always, start with the chart, the S&P 500, and nice bounce off the 200-day moving average. Yesterday was very indecisive on volume. The candle at 2 o'clock was looking pretty good, and then we had that nasty close. But really strong candle today. Still did not get back above yesterday's highs, so that's definitely a level to watch. And then obviously, the big test is what's the market going to do when it comes back up into this area. Your guess is as good as mine. 21-day is crossing back below the 50-day, so that's something to note. A few times where that happened, right here, right here. So that's something to be aware of. But, ideal world is rally back up into here, build a higher low, get tight under 6,000 before moving higher. But we're always open to all possibilities. But for now, these lows here are very key. And as long as they can hold, I think the market can continue to kind of work itself out of this pullback. RSP, nice bounce off the 200-day as well. Again, similar theme for a lot of these index charts. Watch these lows and then what's going to happen when we rally back up into some of these overhead moving averages. QQQ, similar story. And, one thing, a theme of this market has been buying the fear, selling the greed. So it definitely benefits more the day traders, active traders. And obviously that's not something we do at Revere. But again, similar thing. Good thing is starting to see these stochastics. These look poised to hook up soon if we can get some follow through. So that's another thing. Mag 7 off the 200-day as well. Dow Jones, kind of trying to build a higher low here. Mid caps, strong rally back here as well, back above that 3,000 level, but still has this 200-day to work with. Russell 2000 living below the 200-day, super oversold. You can see a stochastic starting to try to hook back up, but take a look at the weekly, below all the weekly moving averages as well. So this index is kind of just been a no touch, but see if we can rally back up and bring some breath. It is oversold. ARC pretty oversold, holding the 200-day. FFTY, similar thing. VIX, good to see this coming down. And, this hit highs of, into this 25 area. 2635 was the high. So good to see this coming back down. And back below 20 would be perfect scenario. And, with this VIX being above 20, hitting 26, that just coincides with the erratic intraday price action that we've been seeing lately. And obviously, very news driven market right now. That doesn't help either, but just something to be aware. If this can leak below 20, I think that would smooth the market a little bit and be good for the bulls. Dollar collapsing today, back below the 200-day. Gold continues to act really well, and talk about an asset class that's held up well and continues to get money flow. Just a very minor pullback and coming back, shooting right back up. GDX, similar thing here, kind of coming out of this cup and handle base. Bitcoin, nice rally here. As long as it holds these lows down here, I think it's in good shape. Probably expect some frustration in this range. Doesn't necessarily look ready to just rip back up through here, but this was the gap that it held. Tested it twice here, and now falling through a little bit today. So just likely needs some more time, but good to see this not coming down. And I always view Bitcoin as a sign, as a proxy for risk on, risk off. So this is going back up, and it sometimes tends to actually lead the NASDAQ, whether that be to the upside or down. So seeing Bitcoin stay bid could foreshadow what's come for the NASDAQ, and then vice versa if this starts to roll over. But doesn't always work that way, but that's just something I've noticed. Bonds holding back above the 200-day. TLT rejecting it here, have been in a nice relative strength phase as of late, but coming back, and that coincides with rates trying to bounce back up a little bit today. That's the inter-asset correlation. Let's take a look at the tail of the tape. Alrighty. News. We had ADP and PMI data. Nothing too crazy. Thursday, jobless claims, and then Friday, big one's going to be the jobs report. Coming in today, the keys, S&P versus the 150 and 200-day, green arrow there. Qs held the 200 and 150-day, still watching that 100-day, and then Russell 2000 continues to live below that 200-day, and then into tomorrow, pretty much watching all the same things. This is day one, so knowing this market's very erratic, just like to see some more confirmation there and see those averages hold and start to slope back up. Day count, this is going to be moving up to up one, 9 days below the 9 days below the 8 EMA and 9 days below the 21 EMA. Sectors wise, China was definitely a highlight today, and I'll cover some of those charts. Extreme strength in that area of the market, and just emerging markets in general have been very strong. You got the dollar leaking below the 200-day, and you can look at, the euro is making new highs. You have other countries like Colombia that's been on a big run. So continue to see, minor rotation out of US markets into emerging markets, and the dollar coming down again today helps. Bitcoin was strong. Home builders, real estate, those are quite oversold, trying to prop back up, worth watching in the coming weeks. And then weakness, utilities, regional banks, and oil services. In-house today, bought a starter at NTNX, and then trims Starbucks ad from yesterday. RVAB 0.59, open heat minus 2.12%. And the bottom line, bulls step up at the 200-day moving average, big jobs report on Friday. 21 over 21 list is still under construction, so we're just going to go through some charts of interest. First, I want to cover Marvell is getting smoked after hours, down almost 17% on earnings, and this just fits the theme of weakness in semiconductors. Not really surprised. The sector's been weak. Nvidia couldn't go up on earnings. This one significantly off the highs, looks oversold. What's oversold can get more oversold, and this one's coming. This is trading all the way back down to 75, so right around in this, and I'll visualize it, coming back down into this area down here. So we'll see, but just sector's been weak. MongoDB, this one as well, getting smoked, down 17%, pretty weak guide. So this just is another picture of earnings has been a mixed bag. You have some winners, you have some losers. Then even if you buy the gap, some have been coming back in after a couple of days, and just a mixed bag. You don't really know what you're going to expect. In a super strong bull market, in a strong earnings season, typically you're seeing the majority of the stocks gap up and then continue higher, like we did towards the tail end of 2024. And that brings me into this. Okta, this is a highlight of earnings, gapped up, day two higher high, volume sustaining on both days. And this one's coming out of a really nice stage one base. Historically, on earnings, this tended to gap and crap, but now this looks like a character change, big volume, decent numbers here. and chart setup's really good. So this one definitely on our watch list closely. If this can flag out, pull back a little bit, set up, that would be good. But nevertheless, pretty 5-star 2-day post earnings action there. All right, let's take a look at China. So we'll start with the ETFs, right? These China, that's the triple. Let's go KWEB. KWEB and FXI are crushing. They're leading most markets year to date. Both these are up 20% plus. And they pulled back to the 21 earlier this week and really strong day today, closing up, 7%. Take a look at these weekly. Talk about these stage one bases all the time. This is as textbook as it gets. So, although for a while, China's just been a horrible place to be, but price is telling you otherwise here. And if you look, BABA, this is what I would consider the liquid momentum leader of the theme right now. And this one had another really strong day, up 8.5%, and it's got ants showing up. And we can look at some other names. You got Futu, super strong day today, back above the 21. JD, this one again coming out of a nice base, and they report earnings today. I'm not sure if they've came out yet, but nevertheless looks pretty good. And then some other, PDD. This one's another one that a lot of people like, and this one was trending nicely last year for a bit in 2023, but it's been in a big range ever since. But this one's trying to perk back up above the 200-day. This is another more liquid institutional type Chinese name versus some of the more, speculative. You never know what you're going to get with some of these China stocks. So it's better to stick with the ETF or like a BABA, Futu, names like that. But no denying the strength there. And yeah, they continue to move higher. And then do the 21 over 21 list is under construction. Let's just take a look at some names. Robinhood, this one's trying to reclaim the 50-day. This is pulled back pretty harshly, but it's a little bit more orderly than some of the other ones. So continue to watch this one, getting quite a bit oversold. Snowflake's another one that looks pretty good. Obviously gapped up on earnings, came back in, but this one's still trying to set up in this range. It's been pretty choppy and has led to a lot of frustration, but that's just, the market's been choppy, and most stocks are just gonna follow that as well. Reddit, this is another one trying to hold the low end of the base in the 100-day moving average. Eli Lilly, GROTECTION owns this. Super nice trend here, and look and merge out of this flag and continuing higher up the right side. So this one obviously came back down towards the tail end of 2024, and now this has been really strong this year. Starbucks trimmed half this one on the break, but ended up undercutting, reclaiming the 21. This one still looks pretty good. ASTS, this one's not for the faint heart. It's got a huge ATR, but this one's breaking out of a really nice flat base here. Had earnings, shook out below to the 50-day, came back in really strong day two. So it's good, especially when the market hasn't been rewarding buying strength or breakouts, or just, everything kind of tends to gap and crap. It's good to keep a running tally of like names on your list that actually you don't necessarily even have to buy them. If they just follow through, you can kind of just in your brain put a check mark it, like, hey, maybe the market sentiment shifting, and it's getting more risk on. WGS, this is in the medical. This one's coming out of a nice little post earnings continuation flag. Let's see what else. Take Two, Interactive, really nice post earnings flag here, kind of breaking higher as well. This one's been on a really nice trend. INOD, this is another, smaller type name, but this one's looking to reclaim that 5517 pivot. Docs, got a pretty clean downtrend line here off the 21, looks pretty good. Unity, again, pretty linear downtrend line coming back through. Net, this one's off the 50-day here, building a tight little range here. Palantir, obviously just one of the liquid AI leaders. Nice reclaim of the 50-day today, back through this 84.80 pivot. So got this 100 level overhead, and then also this declining 21. So that's something to keep an eye on, but nevertheless, it looks pretty good. So, good to see some names starting to turn around, and obviously index is holding the 200-day moving average. We'll just recap here. Good line in the sand to have here. And then also, usually what I wanted to mention a couple of things as well. So first, I just annotated this chart and, saying just how the market's been choppy and it will be always clear when the market does its best work, when it's trending above rising moving averages. When you're below chopping around, it's going to be a much harder environment. So, from Rivera, you see what we're doing every day, and that just is looking for relative strength, taking smaller sizes, looking for stocks at the highs. And eventually, the trend will flip, and you'll have a smoother trend. But in the time being, it continues to be choppy. So this is just I drew this out. This is just a good picture of what does a nice trending market look like versus what does chop look like. Some other notable things. This NASI, this is getting quite oversold. RSI sub 30. This indicator is coming back to August or July lows. So this is pretty oversold. So this could see us, if this starts to snap back, this would coincide, market bouncing at a level and seeing some stocks start to turn back up. And then also another thing, seasonality chart. This shows that typically the market finds its floor into early to mid-March and then sees a nice rally into the end of the month through all the way through April. And look at the February seasonality precedent, followed it quite well. So something that we're watching pretty closely and see if it continues to play out. Always good to have in the back of your pocket. Um, so that is everything I've got for today. I always like to hear from you guys. My email is connor@revereasset.com. You can find me on Twitter as well at ConnorJBates_. And you can always reach out to Dan or Don at revereasset.com. Phone is 855 Real Wealth, 855-732-5932. If you're ever interested in becoming a client, as always, please reach out. And that is going to wrap it. I hope you guys have a good evening and thanks for watching.